The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this August the 2nd, and we're looking at the S&P E-mini down 111. And yesterday was very ugly. So this is accelerating to the downside. You've had this arch formation, dreaded H that took out the left side low. This is just the first bar. And it says that 53.67 right now. That makes that whole 53, 62, 53, 58 area very strong support that must hold. There was a chance that if the earlier rally got just a little higher, instead of stalling at the 42, 16 area, if it could get to the 50, 54.25, there would have been a little bit of burst, kind of a relief rally that went higher, and then I think we would have had a problem. But this is saying, forget about it. This is some serious stuff going on. Now I need to talk about this step by step. So let's go through this. I wanted to show you this chart right here. I showed this to my subscribers last week, and I said, it's usually interest rates that are the most important aspect in terms of market indecision. And if that's the case, the way that the yields have held kind of in the higher range, but not going much higher, and yet not pulling back was really important. And that in my work with this Chapman Wave Dark News Index, I always look at this left side, right side, whether it's internal high going to a residual high for the Dark News DNI, the Dark News Index, as we've had so often. But I couldn't put in the rectangle there because the interest rates really, they weren't a factor. And what I said is it could be geopolitical, it could be anything, but I'm looking to see how these double tops right here back in March of this year, back in May of this year, there was just a mini 3-bar double top. But you get these double tops. You get them at the bottom. I always discuss this in great detail, internal low and residual low. What does that mean? It means that if you have, say, an earthquake and then there's the aftershock, that aftershock sometimes could be weaker, it could be about the same, it could be even worse than the actual earthquake. So when it's worse, it means that, like here back in October of 2023, there was that low that was made, and then there was that arch formation. It failed and it went to a lower low, and that was the residual low. And that residual gave the fantastic buy signal, and that continued. But even then we had, and I made it in gray because I said interest rates are really not that much of a factor. So I'm putting it in gray, this Chapman Wave Dark News Index. That was December and then February of this year. And then it was March of this year and then May again. And I just discussed it. I've had to put it in now a little bit later because we've had, and I usually don't do the upside. I usually only do the internal low and residual low. I talk about the internal high and residual high, so I spoke about it. But you can see this move that, now I can go to the real thing. In the Dow, the move that went to, you're looking at the daily, weekly, monthly 30-year Treasury bond continuous contract. I mean, that is a huge move up to, that is a decisive move to say, at this particular point, things can change, and I'm calling it a leg E in the daily chart. We've had a huge break in the daily chart from the cup formation going to the weekly cup that turned into a Chapman Wave inside track repellent zone breakout. Now we've got this as a propellant zone, and we can take the, very sensitive. Let's do this. All right. We can take this cup formation and put it there, and that says, in my measured move, if we go to the high in bonds of the week of the 29th of December of last year, at, and of course this is a continuous contract, so that price will change. I don't usually like to type prices in because it gets moved around, but let's call it 128 and 2/30 seconds. For the moment, I'm just going to say 128. It ain't root 128, it's just 128. So today's high is 124.28.32. So how would I then measure to see where it could go to and in what time frame? Well, what I do is I grab this little rectangle right here. It doesn't have to be, it could be a straight line. I do this because it's just so visually nice. Look, I go to this candle here for the plumb line of the low, which is this candle right here. So we've gone from the high of December the 29th. We've gone to the low of April, the week of the 26th. And we're going to go click, and we're going to see if this works out. I've done this with so many charts, and many times it does exactly what we're looking at, because it is a measured move based on the chart formation itself. It isn't based on an abstract number or anything like it. It's saying this is what the chart's telling you, and this is what could possibly happen. And then what I do is I take a left side low of importance, and I take it and I draw a Chapman wave inside wedge, target repellent line. Okay, so there it is. And it says the next resistance today would be 125 and 5/30 seconds. That's quite a bit higher than the where we are right now, 124 and 16. But it says that by the week of the 23rd of August, we should be testing the high that was made at 128. Now, this gets smoothed out. Maybe the price changes, but it's that peak A that was made the week of December the 29th. And then what I do is I make this green, and I make it a dashed line. And let me go back to what I was saying. So within the context of yields, let's go to the TBT. That's the inverse, going right down to the 200-period moving average in leg D. And that's at 30.33. It's trading right now at 30.32. Plummeting of the last few days, gaps down. It's had 4 gaps. 3 gaps. Three gaps. It's a 4-gap play. And that's the area that I'd be looking at. But where's the target line? Let's do the exact same thing. This is the week of December the 29th. And that would be 29.22 for the ultra-short Lehman 20-year Treasury bond ETF. Let's go to the TLT. TLT is a very strong spike to the upside in the weekly chart. Leg C, this is a leg D. I'm calling it a D in the daily, D for daily. And we're making that a C. And I'm changing this plus sign to an up arrow because it went to a buy mode with a stochastic at 80% finally. There you are. Okay, so that just says it's the same thing. I'm not going to do it over again. But what it says is that so far the yields. Now, I discuss this because most of the time, serious declines, I'm talking about declines that last quite a bit and have price movement, most of them are involved with yields. So this is something, if it's geopolitical, that's usually just a sudden bout of anxiety and the market just tumbles. Well, this is a little bit more than a tumble. This is a pretty darn quick move from recent highs to the downside in different areas. So let's just go. I haven't finished, so let's go back here. So the S&P right now, the S&P is down 129. That's just gap down. And the whole area is gone right through the area of support. Now the next support is at 5292. All right, I'll be right back. Very sharp move to the downside for sure. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, so what we need to look at here is the next level of support is right there in the S&P, which was at that low of the 11th of June at 53.2725. And so far, today's low is 53. Where did it go? 53.12.27. We've gone right, 87. We've gone right through it. Well, we'll see where we close. This is not a good sign because it's broken the up channel. I can take this out now. Doesn't mean anything. I said at the time that I'm putting it in only to show you a trend line, but the most important thing is this 9-period moving average, still above the 14, but we've gone sharply below the 14. That says if this continues for a couple of days, then you could see the daily's already in a sell mode in the S&P, got upgraded from a sell signal to a sell mode. And now what we've got is we haven't even got a sell signal in the weekly chart. That's the reason why I have to look at this as the yields haven't done it. It has been the economic report. It's really the jobs, the decline in the jobs, and that's really a big issue. So what we're looking at here is, let me go through the QQQ. What we're looking at is key support on the left side is being tested in many areas, and let me get rid of this right here. Got rid of it. This is a leg E to the downside in the daily chart of the QQQ. It made a 503.52 peak F top. All the signs say that it should pull back, but this is deeper than I anticipated. I thought there could be a pullback to the 461, 455 area. We took that out the other day. Had a good bounce, really good bounce, and then yesterday plummeted and today continued. So this left side low that we're looking at right here, that was the 31st of May, 443.06. Today's low is 444. 445.60. So we haven't quite got there yet. Maybe I will do a left side, right side price time match in a moment, but let me do the IWM because this one really got hurt badly. It was leading the pack to the upside and has had from 228.63 just 3 sessions ago to 207 where it is right now. That it's a 10%, almost 11% decline in just 3 days. Well, 4 days, 3 days, 3 days. That is really heavy. And that's just saying that the rotation in the market was one that was done. It was expedient to be able to go to what hadn't been working, to what was working. But now what we've got is we've got all the sectors. Let's just see where the IWH is, the healthcare. IWY, is that IWH? Isn't that XLH? XLH. Good grief, why did I just suddenly forget where the healthcare is? IYH. Did I just do that? IYH? No, I didn't. Okay, there it is. Healthcare is down today. And that's interesting because we have a healthcare stock that we got the other day. It's a fairly new issue. It only came out in April, but it was holding so well. I don't know if it's going to hold all the way through today, but it's holding the stop very nicely. We just got it the other day. It's within the boundaries we were looking at. And healthcare was doing very well. Not today. Look at this, down 57 cents at 53. Oops, at 63. And we had made a peak E, slight fractional high there. Still only a leg B in the weekly chart. So, yes, it has been one of the better areas. iShares US Healthcare ETF. All right, let's go back to our story. What we were looking at is how does the IWM weekly chart, which was still very strong, with a huge, one of the biggest red candles it's ever had. It is the biggest, I'm sure it's the biggest red candle it's ever had in 1 week. It's done that before in a couple of weeks, but not in 1 week. As I say, 228 down to 207, that's huge. So if there's an inside bar next week, then you want to see slightly higher highs and slightly higher lows as you get the rectangle forming. But if there is, whatever the close is today, if we take that out on a closing basis by more than 2 points next week, that's just going to say, oh, it needs more time. Yes, the Russell the Russell 2000 small caps, it's done very well, and it probably will continue, but this digestive is more than a digestive phase. Digestive phase is you go within the parameters that you were recently at, and you start to test the lows. We just took out that low from 215. We're now down 8 points from there. So that's an issue. Okay, let's go to and I had a peak E. Peak E is where you start to get a little cautious. And I said, let's be careful. We had a position. We'll have stops. We took some profits on the stops, and then the core stop was taken out for a small loss. But our core position, that's going to be very important. We want to keep that core position if we can. That is on the IWM. Now let's go to gold. Gold was up sharply earlier on. It stayed sharply high. It's up 36 at 215.17. Now this is interesting. This is the first time that we've had a concerted divergence between the gold and the silver. Silver's up 51 at 28.98. It's nothing close to as good a looking as gold is. And now we're going to see if next week silver plays catch up and gold stalls, because that's what happens. They play a little yo-yo tagging one another, and then the other takes a breather and the other one takes over. So I'm watching this very closely because it came off the 200-period moving average very nicely. The GDX, that's the gold miners. See, this is what I'm a little concerned about here, that the gold is moving up and the gold miners. It's really important. I want to see the gold miners. I actually like them to lead. In this case, they're down to 6 cents at 37.21, and the GDX, which is the gold miners ETF, holding okay. But wow, with gold up like that, it should be in the 38s, and it's not. It's at 37.19, just barely holding on. Okay, we want to go to the dollar. Now, the dollar, this is going to be very interesting. The dollar should be screaming to the upside. It's not. It is screaming to the downside. 103.33, down $1.02. Took out support in the weekly chart. The weekly chart last week went pink in the 9-period moving average. It's accelerated that today. This is an issue. There's something going on here that's a little different to usual, and therefore I'm going to make that a B minus. Dreaded H pattern right there. so far the day is young, but it's taken out the left side low, and we'll see where this closes and if it's able to rally at all next week. SLV, the silver chart, has a little more closer proximity to the silver chart, and it's holding okay. It's not doing great. The weekly chart has a strong 9-period moving average over the 14, but it's still making lower lows and lower highs, almost a 1-to-1 expansion. Now I need to also go to high-grade copper. That was the warning for me. I spoke about this the other day. I said, I don't like high-grade copper pulling back so sharply. Under the 200-period moving average, it's having an update today, up 0.03 at 4.11. This is really not a good sign. I think the weekly 3.98 is going to be hit at some point. This is not good. Now what I want you to do is to go to let's go back to the bonds. Oh, no, crude oil. I forgot. Oh, sorry about crude oil. Crude oil is down 2.58 at 73.72. I've been talking about this for a while, saying crude oil is not acting. It's within a range, but it's really not acting strongly. It needs to get to the 85s. And it better hold 73 to 72 level, because that would be a problem. Well, here it is at 73, 77, down 252. That's a problem. I'll be back. Dow's down 707, and the S&P's down 123. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
167.15. The 9-period moving average in the weekly is still good, but the daily's in a sell mode. Looking at, let's go to Netflix, NFLX. There we go. Netflix trading down sharply, made a peak G top, a little double top right there in the just under 700, and here it is at 612 weekly chart. I'd say that these weekly charts that have peak Cs, they're really are acting as if they are Ds, and I can't get any other wave count there. Well, I suppose I could, but it would be an unconventional flat-based restart, meaning that it's going back to the 540s. So at this point, it's 613, and I want to go one step at a time. The 9-period moving average of Netflix is still good. The monthly chart is at a peak D. So we'll see how this pans out. We're also looking at, there we go. So we've got that. Oh, Microsoft held very well after that earnings report. Now it's continuing the down move. What was my target? My target was 404.51, the left side low of May the 5th. May the 31st. And that was also close to the 200-period moving average of 403.56. Where did it go to today? Microsoft has a low today of 404.34. Wow. It's just pennies below. And right now it's a little bit above at 407.09. And what I'd said is the stalk leg formation, that beak gave a really nice bounce. And then you're on your own. And if you look at this is still the beak. And the most important thing about this pattern, it'll be a major breakdown if there is a close on a weekly basis below the body, the oval body low of 388.03. I better put that in there because it looks like it's going to be very important. 388.03 is the low. And we're at 407. So it's not too far away. And it's a weekly peak E in the monthly chart. A weekly peak E and a monthly peak E. I have to wait the whole of August to say that the 468.15 high won't be taken out, and that'll be a peak E. So we're looking at all these major, the serious, the heavies are pulling back, except for Apple. Caterpillar, a big heavy in the cyclicals, is down 10 to 321. It made a peak D top. There's your 1-to-1 to the downside. I say the target, if it starts to fail, would be 318.62. Today's low is 317.66. Whoa. And then the next low is that low right here at about 3. Let me give you the exact figure. Caterpillar, the exact low is the 17th at 318.88. We've already gone below that. Oh, not very good news. So Dan says the trend is 1.43. Now, this is something I need to bring up. I mentioned it a couple of times over the weeks for subscribers, but just kind of in passing because it was not important. This is Richard Arm's Trin Index. I call it the Chapman Wave Trin Gauge. Why? I only use the outer numbers. Every once in a while, it goes above a certain level, and that gives me a clue to what the E-mini is going to do and help the Dow the next session. If it's very high, it means that night or the very next day, you're going to have a very sharp move that should help the market. Even if there's a pullback, it says just be ready for a really sharp bounce. That's one indicator which has a very high success rate. I usually put an X when it doesn't work, and on the downside when the trend is below a certain number. So I only use there's up volume and down volume over rising stocks and falling stocks. So and that is a ratio that's worked out. I use nothing other than a high level over a certain number and a low level below a certain number. And look, it missed once. That was when the Dow had this huge move to the upside and then came down sharply intraday, but didn't go negative. And that's the whole thing about the low reading, is that the Dow the very next day, usually early in the morning, goes negative, and then there's a strong rally. Well, in this particular instance, look at this. We've got a Mariposa candle so far in the daily chart. I show this to subscribers every day. The daily, and then the 120-minute chart gave a perfect sell signal at 100 at a peak D. So I'm talking about this, and look at the narrow range that this trend has been in. I've got no reading here other than to say it's going to the trend will stay the same until I get a reading. And in this case, there's no reading at all. So this downtrend is going to stay until I get some kind of a reading. And it's been in such a low range. Even today, the high of the trend, based on the trade station, is 1.52, and the low is 1.87. It should be at 3.52 with the Dow down 700 and the S&P down 130. So there's a normalization that's going on here of belief that this is not that serious, because you're not getting either a very low reading usually happens on options expiration day. Usually it's the monthly, and you'll get this very, very low trend, and that means the very next session, that'll be Monday, you'll get some kind of weakness in the Dow. Here it is in the middle of the range. I'm not getting a particular reading from this, other than to say it's going to continue in the same direction. I did get a peak D reading in the 120-minute chart a couple of days ago, and I said, okay, we've got to be ready for some kind of a pullback. Most importantly, we got a reading of 41,376.00, an all-time high round number, which is always a clue to say, just be careful. We were careful. Then we pulled back. Then we bought a long position, and we had a little bit of profit, and we got taken out. So now we have just our core positions from way back, and we're not doing anything until we get a certain level. And that just says we've built up a huge cash position for subscribers, and we'll be putting that to work. And I want to be very selective about it. In fact, from this level, you don't have to pick the low. You have to pick maybe 2 days after a decent turnaround. So I'm just pointing this out that I don't have a signal yet to say start putting a lot of money to work. Yeah, very selectively. As I say, we've got one stock that we selectively picked because of the way it held up, because it's in an area that I think is positive, healthcare. And we'll see if that case holding up today. We'll see what happens next. Holy moly, says hello in the Den SMCI. Let's see what those things are doing here. Look at that. So it made a 1229.00 round number high, all-time high on the week of the 8th of March. It comes down, makes the dreaded H pattern from a peak C, and now it's tumbling down. It's not doing the cup formation, it's doing the arch formation. Let's get rid of that. That was just put it in to say, be careful if it breaks over a certain level, which it hasn't. And it's a peak E from the monthly chart. I would say they're going from 1229.00 to 601. I would call that about a 50% decline. And that's, this is serious stuff. NVIDIA. Now, I'm a little upset about something. We had, I think it was NVIDIA down again. We had, because the SMHs gave such a good signal about being volatile at 283.07, at some point we had the 3-to-1 short position. So what happened is, got a little bit of profit, a little bit of loss, but we didn't really make a big.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Formation. I'll talk about that right now. So you've got the stalk leg. Stalk, here's the pattern. It goes up like one leg, and our stalks stand on one leg. They tuck the other leg underneath. Then it's got the oval body, must go. Then it's got the neck above the arch of the body, and then it's got the beak. And the beak either stops in the body, or if it goes below, that is serious stuff. So let's see what happens next. There we are with the beak in the body. We'll see what happens next. I hope my sound comes back. I'm live now? Okay. I don't know why I'm live, but okay. If I'm still live, I took a break there. I didn't mean to. The sound just went blank. So there's something going on. I don't know what it is. So let's just do this. I wanted to look at a couple of things like the SLX. The SLX is the steel sector. Very sharp give back. Went to a peak E at 71. Was that a round number, 71? 71.00, round number high and a round number open. No, 71 high. Unbelievable how these round numbers can kick in with such sharp turnarounds. And where is it now? At 65.55. So I need to know that. Let's see. So that says to me that this is kind of a PAVE is the next one. So if the steel sector is starting to weaken, look, the monthly chart is still pretty darn good. It hasn't gone pink. It's holding very well. The weekly chart has been very poor. PAVE was the other one. I spoke about this the other day when I did my webinar. I said we've got to watch this very closely. And what did it do? It went to a new all-time high just 3 sessions ago. So you can see that there's been buying. It's been selective buying, but PAVE is the infrastructure and development ETF. It went to 40.56 on the 31st. Wow, 40.30, and now it is a 37, 40, I think I said 56. Whatever it is. That was, what a mess. Well, it went to the 40s, 40.56. And now it is down to 37.25. It hasn't broken down, and the weekly chart is still good. So what I'm saying is this. I have to analyze over the weekend. Usually it is the bonds, it's the yields that make the market really a flutter. It really takes away from the upside. We don't have that now. What we have is something a little different. And that different is, the difference is that the yields have actually, let me go back here. Look at this. Whoops, I typed in the wrong place. So as I say, we've raised cash. We're waiting to put that cash to work very selectively like we did. And we just did that, and we did nice rallies, but now I've got to be very careful. So TLT is up at 97.58. That is really a big breakout of the daily and the weekly, not the monthly. The monthly needs to get over into the 101 area. That's a big way to go. That's 4 points. But it does say that the Fed is going to now have to deal with the economy may be slowing because the job market's going to deflate. And then what do? They need to make the rates even lower. So I don't know whether the market's stuck. I know a lot of people, there's a whole school out there that says, this is it. We've made a major top. It is all over. I just do not see that at all. The way I see it is these are rotational corrections. Some are severe, and the speed with which you have been moving up and down lately tells you that the volatility, I want you to go back to the volatility. Let's look at that. So the VIX index, so it's come to a very high level, but the market is pretty much way off the highs, right? So here's the VIX at 27.39. The weekly chart, it is seldom, look at the history of this weekly chart. It is seldom that the weekly chart of the volatility index has a close on a Friday way above the 200-period moving average of 18.32 right now. It's around the 18 to 19 level over the past year. Well, it is way above that. So I'm suspecting that we are very close, and I don't want to be overly optimistic here. I'm just saying, based on a lot of things that I'm looking at, based on the weekly charts and the monthly charts, I think that we are looking at a situation that says the volatility index is doing exactly what it should do when there is bad news, market news, and in this case, it's the jobless increase, jobless, the job decrease, jobless increase. And that just says to me, monitor this closely, because if at any time next week the volatility index actually starts to trade the high that was made that big week of the 19th of April, remember that was market turnaround, 21.30. If the market at any point in the next week trades, even for one day, closes under 19, followed the very next day by under 17, that says, you know what, we've made some kind of a low. But those are the factors that I'd be looking at on a very short-term basis. I would say that there is a good sign. At least some kind of a decent bounce is likely today, but I can't say that this is the low or even a low. It's just we'll have to see how the day finishes. But if we close the day if we close the day in a strong move from here that has the Dow, let's go one at a time. The Dow. If I just talk through the break, if someone can just tell me if there's a break. I can't I don't know what's going on here. There it is again. It just says Tiger Chat. I can't get you. I don't know why it disappears. There's something new here that is done there. So I'm just going to say, L, if you can just type into the den. I need to know what's going on because I can't hear anything if there is music. In the meantime, back at the ranch, let's go through this. There you go. Okay, I got the music. Good. I won't talk through the break. You can keep the music on. The Dow is down 741. If the Dow closes, I don't know if it can. I'm just saying if it closes in the, it's at 39,602 level right now. If it can close at 39,847, somewhere in the 840s area, that'll be good.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Back. Final statement. So this is really important. Within the context of, let's just do this backwards. The IWM, this is the small caps that led the way up, had this huge smash downside. However, what the Fed does next is going to affect and effect the IWM's action. The way the monthly is, the weekly is acting and the monthly is acting, it looks to me as if the 206 to 205 level, it would be filling a number of gaps all the way. In fact, it hasn't filled that big gap that started around about July the 13th or so. There was this gap up and then it just kept gapping to the upside. So I don't know if that gap is going to be filled just yet. So let's say the 206 area should be very strong support. If you're looking at the Dow, the support that I'm looking at for next week comes in. Here's the trend line. I'm going to draw this in from right there. Okay, that trend line says 39,400. Remember, I was saying 39,500. So let's go 39,500 to 39,400. A close under that says, now you're looking at time and price. That's a problem. The S&P right now is trading at 53117. And now it's a different pattern that I have to look at altogether. I didn't have a left side, right side price time match. I could have done to that little doji candle. And that says by Wednesday of next week. That's if the worst case happens. Then we're going to take out this low right here of the 4th of June at 52.57 and try to tackle the major one on the 31st of May, which is at 51.91. I don't know yet. I think that it's going to start finding support very soon because, as I say, it's usually the rates that affect the market dramatically. And that's what I'm looking at. And as I say, the volatility index to me is, I wouldn't say overbought. You never know how much overbought it can get. But it's in an area it hasn't been for over a year. And this is next week much closer because as soon as it starts to break 27 right now into the 22, then the 19s, I think this big move is done for now. We haven't got